Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, June 14th. Taking a quick look at futures. The equities are flat as a pancake. Oil's up about 0.8. Gold is down almost 1%. And Bitcoin is up 4% in the pre-market. I'm starting the video at 5:44 a.m. So we've got a long time before the cash session opens. Before we dive into it too much, I want to welcome any new visitors to the page. I really appreciate you stopping by and checking it out. Hit the subscribe button and the alarm bell. You won't miss any of my future content. I get videos out at least once a day, often more than that. And if you go over in the show notes, you'll find links to the website and how to register for all my content. That would be great. And as always, pass the link along to others in your trading group. That'll help me get my word out and grow my channel so I can reach a wider audience and hopefully help people with the levels that I point out so they can work on execution. So what I'm going to do this morning is quickly go through the indexes and FATMAAN names. And then I've got quite a number of setups that I want to show you heading into this week that may prove to be helpful. So just big picture, we've got Jay Powell Wednesday at 2 o'clock with an FOMC statement. And then, of course, a presser that starts at 2:30. Then we've got quadruple quarter-ending witching on Friday. Taken together, the setup is going to be, today and maybe part of tomorrow, a drift up. That's usually what you see ahead of the Fed, but light trading in general. And then as we get closer to the Fed announcement on Tuesday, things will probably grind to a halt. And then on Wednesday in the Fed announcement, as I mentioned in the commentary on the blog this morning, Powell's going to talk about inflation. He's going to talk about asset purchases. He may talk about, we're starting to think about tapering. I think it'll be very, very subtle, if at all. Or say, everything's transitory. We remain focused on employment, And I would be surprised if the reverse repo market doesn't come up either pre-addressed by Powell or a question asked at the presser about reverse repo. I just checked on Friday, the reverse repo was a whopping $557 billion. And remember, the repo market is when banks want to borrow money overnight in return for treasuries or other highly liquid, secure assets. So they get cash overnight and give the Treasury back bonds. This is when they're putting money back in the Fed. Like, we got $557 billion we don't know what to do with. So here, you hold these for a set period of time and give us back treasuries. So something's going on. It's way over my pay grade to know what that is, but it's not how the plumbing is supposed to work. These are the biggest numbers ever recorded, in the history of reverse repo. So I'm sure he's going to make mention of it. And, whether that's just an acknowledgement, we're working on it, or here's what we're doing, whatever. So anyways, that's what we've got on tap for the week. Now, as far as the indexes go, we've been at the highs, but not very inspired movement. I mean, when you move 70 cents on a $425 instrument, not much is happening. But let's go over the levels. If they can pop the highs from Friday, that's a long. I think as long as they stay in this trading range between 423 and 424.25, then I still think it's a long. You can be long against 423. That's fine. Any drop below 423, opens the door to some backsliding. And just to refresh your recollection, this 2.9% here corresponds to the measured move off of this double bottom low way back when. That projects out to 429 as a measured move target. So I'm going to leave that there just as a reference point. Whether we make it or not make it, I will leave that there till we either resolve down and then the measured move is off the table, or we grind higher and eventually get to 429. SPY 30-minute in this channel. Here you can see the highs from Friday. Breakout this morning, you can take that long, and then you've got channel support and lateral support at 423. So pretty clear there. Same thing with the Qs, grinding higher, but not very impulsive. Up 0.26% on Friday, just very small candles moving forward. We've got a prior high up here at 342. We've got a base at 339.75. So I think you can stay long against that and hope for a breakout here. If you're not in at all, I think you got to wait till we either make a move up to 342 or we pull back. But at this point, I think you want to be buyers of dips. So instead of, looking for a monster fade, I think the chances of that are small, with the caveat being on Wednesday, if Powell has a gaffe or says something unexpected, then you may see some real volatility come into the market based on that. But that's not the base case, so keep that in mind. Also, while I'm on the topic of keeping stuff in mind, if you're typically a person that would buy a weekly option to trade any of these indexes or FATMAAN names, just remember that they're gonna, with the quad witching on Friday, they're going to try to keep it in a tight range. And if you have weekly options, you know that even just going nowhere is a losing trade for you. When you got weekly options, it's got to move forward. It's got to move in the direction that you want. So even though you may see prices not going down or going against your position, even if it's just sitting there, it's going against your position. So if you get in these weekly options and you don't see price moving and keeping ahead of the time decay, you got to take that off and either wait for a faster move, or just step aside if you don't see any volatility moving. So keep that in mind. Sometimes this particular week is a hard week for weekly options unless you can really catch a runner. So keep that in the back of your mind as you're trading this week. 30-minute chart, nice upward channel that I've dropped in. As long as it's in the channel, things are bullish. You'd have to be a little bit concerned, if you were to drop out, but you do have a support level here at 339.75. And I think, like I just said, anything north of that, I think bulls are going to be fine. IWM, as we talked about on Friday, needed to have a green day because it was down here at the bottom of the channel, threatening to break down after two significant days of selling. And you know what? It did what it had to do. Had a green day, had a gap up, held the gap, and closed on the highs. So that was a real good sign for IWM. So it has recaptured the channel, and now if it can pop above 232, we had a prior high up at 334. So above 332, I think you can take that long and look for 334. So that's where I see on IWM. Facebook has gotten a little soggy over the last few days. I've dropped in a little downtrend line here just for reference. What the bulls got to see is a recapture of this level here at like 333.50, and then once it takes that out, then the door is open for a move back to the prior highs up near 338. But in general, Facebook has been pretty strong in the group. Can't say the same for Apple. 60-minute chart, a lot of oscillation between 126.50 and 128. For my money, wait for, if you're a bull, wait for 128 to pop, and then we can get long against that because we've got this confluence of important moving averages that have converged on the daily chart. And if price can get above that, then those moving averages will become your support level. And you've got all these reactions, rejection, 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 rejection. Once that pops over, all this will become support. So that will be a much higher probability trade. But as it stands now, I think 126.50 is your pivot. If for some reason things fall apart and it drops below 126.50, then the door would be open for a move back down to 124.50. Tesla. This is just eating up premium. I mean, when you got a $600 stock that's moving, 23 cents in a day, the only people who are winning are market makers selling options to people, because you've got to get, like I just said, you got to get movement, and you got to get fast movement if you're in weekly options. But just from a technical standpoint, we're in the middle of a range. We're above 595, which is bullish, but yet we're below 625, which is your first level of overhead resistance. So right here in the middle, I think you just let it chop away. If you get a move back down to 595, or if 595 breaks, you can try to take that short for a move back down in the bottom of the box. But really, for my money, you got to get a breakout here at a minimum at 625. Then you can look for 640. Another way to approach this stock is just wait for 640. I mean, this is just a big basing pattern with no particular direction, strong direction in either way. So make price prove it can break out. And then once you get above 640, then you've got some running room, and you should be comforted knowing that you took out the major downtrend action, and that would be bullish. Microsoft is right in the middle of a big $6 gap. I got long on this gap entry. It's been slow but grinding higher. I have calls for Friday, so I've got to see this start moving. If it doesn't, I may have to close out my position and go farther out in time. But this setup here is, my expectation is that the gap will be filled up to 262, and then we'll have to evaluate it from there. And I dropped in this little uptrend line just for a reference point if you guys are in the trade. And if price were to break this uptrend line and come back to back test 256 and you're not in it, from a technical standpoint, you can take a long there with a stop just below, and then hope and pray for the gap fill. But it's already come back to test it 3 times on these candles from last week. So my expectation is the back test is already complete, and if everything goes according to plan, it should go north from here. Amazon continues to do well. We had the impulsive gap and go with follow-up action, taking out really important levels of 3250 and 3300. Now we're up to 3350. So above 3350, I would be long. and you've got the gap here. So we've already touched the gap on Friday. We touched it right here. So that first touch was rejected. And now my expectation would be, if there's any power at all, Amazon will be able to get inside that gap and fill it and go up to 3,400. So Amazon has been showing some relative strength, waking up again. We'll have to see if there's really follow-up and follow through more than this, but right now this is what you want to see if you're an Amazon bull. This has been much easier trading than, all of this stuff in here where more or less just, chop people to pieces. We're getting more unidirectional action with some power candles mixed in, and that's what you want to see. Google up at the highs, take it long above 2430, and then look for a move up to the top of the channel up towards 2470, 2480. You'll be in blue sky territory with no natural sellers, so Google remains strong. I like it long. If you got any kind of little pullback to trend, anything like that, you can get long with a stop just below. But I like Google higher. Netflix is in the Tesla camp. This is hard, choppy trading, no real direction. Stock's not moving enough to make you money on weekly options. So I think you've got to wait to see some evidence of either a breakdown or a breakout where there's more enthusiasm behind the stock. So right now I'd kind of watch it, but I don't think trying to trade it is the right idea, especially this week. Semiconductors trapped in this range here between 248.50 and 252. I think if you get a breakout here at 252, your target is 256, and that's a prior high back on the daily chart. So I think that's an important pivot at 252. Anything above that, I think, should be bought, and with any luck, get a follow through up to 256 into the week. Now let's move on to some trade ideas. Some of these I sent out on Friday, but for the benefit of any of you that didn't get the notes throughout the day, I'll just run over these really quickly. Snap has been in a $16 wide consolidation range for 6 months. Now it's threatening to break out. So if we get a good breakout above 64 that's impulsive, I would get long and look for 80 on a measured move. 16 on the 64 is 80. That's where that measured move comes from. So have your alarm set. Know, if you want to take that trade, or, like with any of these ideas, it's all in the context of what you've got going. So you can decide whether that's something you're interested in or not based on that. But anyways, I like this setup after this long consolidation. A breakout hopefully would have some power behind it and get it moving towards 80. CAT continues to break down. We flagged this over the last couple days. I have a put spread on for July. I'm looking for lower prices in CAT. My first target is down here around 212. And then my second target is the 200. So my put spread is a July 220, 200 put spread. And price closed at the lows on Friday, which was nice to see. Pins. This is a new setup. We had a touch at the bottom of the gap on Friday, which was rejected. So now what I'd like you to do, especially if you're interested in the trade, is alarm 69.50, and then if you get that gap entry, you can get long against 69.50 with a stop just below, and then see if you can get that gap fill to 77. That would be a nice, $7 trade. That would work out great. What I also like about the chart is price has broken above all the moving averages, recaptured them all, which is always a bullish thing. Now you've got the 8 and 21 day rising, and you've got 50 EMA support below as well. So I'm thinking that 66 is going to be good support. Why? Because you've got all these moving averages that just got taken out that are below price. So a good level of support there, and then hopefully you get the break into the gap and go ahead and fill that. Couple of charts on cybersecurity. We've got Crowd. We've got a nice cup and handle set up here with the neckline. On Friday, prices emerging, and this cup and handle was pretty deep. So to get a measured move on a cup and handle, you take the distance from the neckline down to the bottom of the cup. In this case, it was 26%, and adding that to 230, you get a number way up there. I don't have it all calculated, but it's going to be up towards 300. So that will be a nice trade to alarm 230 or take it out of the gate this morning if it's green and be in that trade. Another one, same sector, same setup. Palo Alto, cup, handle, neckline, recaptured all the moving averages. I would alarm 370, and once you get that breakout, take it. And the measured move target is almost 14%, and that if that plays out, you'd be up in the 420s, which would be nice, with a first target here at the prior high at 400. So two stocks in the cybersecurity realm, both with the same setup. You can also look at FireEye. You can also look at Cyber, CYBR. Those both have charts that are shaping up. You may want to check out others in that particular segment. But I think as long as we keep getting these hacks, every other day, it seems like there's money flowing back into this segment. So a couple of setups there for you. Activision, same kind of setup as Snap. Big trading range, starting to emerge from that consolidation range. This one is $10 wide. So on this breakout into 98, your measured move target would be 108. So I like this setup. You are going to have resistance at 104, but if you get long now against 97 and we make it to 104, we already got a winner. So I like this setup. I like consolidation range breakouts. Why? Because energy has built up during this amount of time, and then when price emerges, you should not see it return back into the trading range. So very often, these are good risk-reward type trades to make. And you definitely know when you're wrong. Why? Because if you break out and then you come back into the range, you're wrong. The breakout failed. This was a failed breakout. Whenever you have a failed breakout and you come back into the range, the automatic target is the bottom of the range, and we got that here. We actually got it right here as well. So you can see how that works. So now as we're peaking above, we got to hold that. And playing the scenario out further, say you took this long and you got a green day and then you think everything's going great, and then price returns back into this trading range, first you're going to say, damn it, failed breakout. But then your next thought should be, where's the next opportunity? And just using the prior price action, you can say, okay, now I'm flipping short. We just had a fake breakout. Now we're back in the trading range. I'll set a stop at 98. I'll take it short at, 96.50 and see if we get a move all the way back down to 88. And then you took that failed trade and you turned it into a positive trade going the other way. So always be flexible in your thinking. Don't get too distraught over a failed trade. Reorient your mind quickly to where is the next opportunity. And if there isn't an opportunity in the stock that you just stopped out of, move on to another stop. But in this situation, if this doesn't work and it comes back into the range, there will be an objective trade to make going the other way back into this consolidation range. CSCO, ran across this one, pretty interesting. This is the weekly chart. Price is threatening to break out of the weekly chart right here at 55. And I went back and looked. The 2000 CSCO high was 60. So we get a breakout here at 55. I think it's going to go like pretty quick to 60. And that might be a nice little trade. It's not going to rocket quickly. That's all relative, in relative terms to other faster moving stocks. But CSCO's been working. I mean, CSCO just keeps grinding higher. And now that it's here at this key level, I think it's an important place to watch for a potential breakout where you could get long against 55 and see if you get that move up to 60 to the prior all-time high. And then if you get 60 taken out, you truly will have blue sky with nobody above. And lastly, revisiting Yeti, broke out of this consolidation range, broke out, had a bad day at the office on Thursday, but bounced right back. I still like Yeti higher here. And above 95, I think you can take it long and look for 100 and just, put your stop somewhere below. And if you got if there was a big red day today that brought it back, towards 90, I think you can get long there as well against 90 with a stop just below. I think that would be a decent trade to take. I was able to get a double. I had short dated options, so I really couldn't afford to wait after this red day for another potential red day. That would have really hurt. So I took off my position, and so I'm out, but I'm going to be looking to re-enter this if I get the right setup. So I hope that helped. Just as a quick recap, we're near the highs with SPY. Well, actually, we're near the highs across the board. A lot of forces at work that want to keep this a narrow range week. Make sure that if you're in weekly options that they're moving in the right direction and not just eating you alive on time decay. The market will probably slow down tomorrow at noon, ahead of the Fed, go into suspended animation. Then Wednesday morning, suspended animation. And then there'll be some volatility when Powell speaks. And always remember that first knee-jerk move out of the FOMC is usually fake. So don't get wrapped up in that. Let it play out, and then we'll know which direction it's taking. So I hope you found the info useful. I hope you have a good day of trading today. This has been Chris Buss with Traders Profit Compass. Talk to you next time.